Funding for Market Journal is provided by the Nebraska Soybean Board.
Whether it's spring planting, fall harvesting, or just a drive across the state, soy biodiesel helps a diesel-powered engine operate in a demanding job. Soybean oil from Nebraska soybeans makes biodiesel a renewable fuel that's also environmentally responsible. The soybean checkoff plays a major role in supporting the use and availability of biodiesel. The Nebraska Soybean Board, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs analyzes cattle markets. Jeff Peterson discusses selling strategies for corn and soybeans. Galen Erickson talks about the use of Zilmax in the feedlot, and Al Dutcher gives his weekly weather forecast. Mike Briggs is our cattle market analyst this week. Each month, Oklahoma State University surveys at least 1,000 individuals to determine consumer preferences and trends. It also tracks awareness and concern of food issues, listing Zilmax in its study for the first time this month. More on that issue later in the show. The pressing concerns for some in the beef industry are demand and consumption. With tighter beef supplies, meat can become more expensive in the grocery store. That's if people are willing to buy it. Oklahoma State's results for November 2013 show shoppers are now anticipating higher pork and beef prices and lower costs for chicken. They were also willing to pay less for steak and pork chops this month as compared to October, but willing to pay more for chicken breasts and wings. As for those raising the cattle, feeder market prices have been remarkably high with tighter supplies expected. The good news, though, for those in the feeding sector, the corn crop looks to be plentiful and the price is struggling to climb. When we talked with Mike Wednesday morning, I asked if he felt corn could drop even more.
I don't know if corn can go a whole lot lower. We've taken a lot out of corn. It's basically half the price it was last year. You've got the farmers have pretty good financial backing, so they've put a lot of the corn away, and I think they're going to hold. They all think they're going to get $5 for it. They're not. They're not getting it. But I do think because of that and because of the demand you have through ethanol and other things, I think you're going to see a continued strong basis throughout the year to try to keep pulling that corn. But I think if a farmer has a chance to get $4.50, he probably better think about taking it, because there's no reason for it to go past that at this point.
Are you a big buyer where it is now, or do you wait for it to go a little lower?
I'm just going to sit and just go hand to mouth until the market proves me wrong going up. There's no reason to do anything as far as I'm concerned.
One of the concerns you mentioned before we started today was that the oil was being taken out of distillers' grains, and that's a concern that we heard last week at a nutrition conference as well. For the casual observer, tell me why that's a problem. Because
primarily why we like to feed distillers' grain is as an energy replacement, because it's very high in fat and high in protein. But if they're going to take the fat and or the oil out of it, that reduces the nutritional content quite drastically. So then at some point when the oil gets about so low, you need to have a different price differential between that and corn. And if they take enough of the oil out, or the price is too high, its only use is as a protein supplement. And in our ration right now, that's all it's in there. It's in as minimal levels to provide protein to the animal, and that's it. And that's always been a concern of our cattle feeding industry, is that, well, gee, here comes ethanol, now we're going to have higher corn prices, but we'll have cheaper distillers to offset that. Well, now you're not even going to have that. In fact, in some cases, distillers is priced above corn, and it may or may not have the nutritional value it had 2 or 3 years ago, so you're really in kind of a bad spot.
Right, and to switch off of that would be a significant change, right? Because it is a stable part of your diet right now.
It is, you know, and we've all kind of forgotten. I mean, my gosh, we've been feeding distillers grain for 15, almost 20 years, and it's been so long since you just fed a straight corn ration, you don't hardly know how to handle it anymore. But we may be faced with that in the not too distant future.
Feeder cattle have been on a run here. Where's the top?
You know, that's a great question, but as corn continues to erode lower, that fuels the feeder price, and if we can rebound these live cattle, that pushes it up that much higher because there's going to be so much competition for feeder cattle because we have so much bunk space that I don't know where the top is. I think the top, we haven't seen the top in the feeders yet, I don't think.
All right, what about selling here? That's a pretty good market right now, but is there any margin to be made?
I don't think so. I think we've beat this market up pretty good. I think we have a chance of a little post-holiday, post-Thanksgiving rally. Although having said that, I also think we've probably seen our high for the fall. It's going to be interesting. Maybe we can tighten these numbers up a little bit more as we go forward, but we placed some pretty good numbers in that August-September area of pretty large cattle. Some of those cattle towards Christmas are going to start coming to the market. And our demand doesn't seem real deep. Beef is really high, so I don't know how high we can push that stuff.
Who's in the driver's seat there? I mean, are the packers able to dictate price, or do they need to fill orders as well?
I don't think packers can dictate price because I think they're in the same situation as the feed yards are, is that there's too much packing capacity, just like there's too much feeding capacity. And it's really hard anymore to equate packer margins on, cost of cattle versus what they're getting for box beef, because there's so many branded beef programs, there's so much export, and they do so well with value-added products that we don't see. So it's pretty hard to tell what their margin structure is like. I think it's better than it looks, and they're going to want to keep processing cattle. That's a good question of who's in the better driver's seat. I don't think it's the packer.
So far this year, we've seen production numbers and slaughter numbers lower. That's to be expected, obviously. What do you expect, maybe as a grand scheme of things, to expect when the fourth quarter numbers would come out?
I think fourth quarter, you're going to see your tightest numbers of the year. Then you're going to see a little uptick in January and February, which is not always great because that's not a great beef demand time. But we seem to be able to push beef about so high, and that's it. And until we can blow through that level, beef has become a luxury item. How much shine you want to put on that thing, I just don't know. With the economy as bad as it is, I saw it on CNBC today. A Walmart opened in Washington, D.C., and they had 20-some thousand people interview for 600 jobs. So it's not a very good labor market, so I don't think the economy is as good as people would like to make you think.
Next week, North Dakota State Extension economist Frayne Olson will be our market analyst. Governor Dave Heineman has made a formal request to the president for major disaster declaration for 9 Nebraska counties following early October storm damage. The counties are Adams, Howard, and Sherman in central Nebraska, Dawes, Sheridan, and Sioux in the Panhandle, and Dixon, Thurston, and Wayne in the northeast corner of the state. The Nebraska Emergency Management Agency's preliminary estimate on damage from those separate storms is at least $3 million. If the president approves the request, public assistance could help with costs to remove storm debris and repair and replace roads, bridges, or other public buildings and facilities. The latest crop progress reports show Nebraska is in line with the national average for corn harvest. The state's farmers have picked 91% of their crop, which is 8 points ahead of the 5-year average. Only North Carolina has finished its corn harvest, while Ohio and South Dakota now join Nebraska and Louisiana with soybean harvest completion. On Friday morning, Jeff Peterson from Heartland Farm Partners joined us to look at corn and soybean market movement as harvest wraps up across the country. Soybeans had a strong day yesterday on Thursday. They're starting off well again this morning. Where do you think they're finding that movement from to gain ground?
Yeah, everybody's looking at that and they're asking, what's going on in beans? That's a big question we get, Jeff, and it's demand. China's been a big buyer. Yesterday they stepped in and bought more again, and they bought a lot more than what a lot of people are expecting. We're already at 90% of the amount of exports that everyone expects us to have already, and we're only 3 months into the year. So that's where a lot of the strength is coming from.
And China's been a big buyer yet this year, but do they continue to be a big buyer going forward?
Yeah, that's the million-dollar question. The general feeling is that they're kind of front-loading. China gets very concerned about social unrest. They want they want cheaper food. They've got a lot of demand in their poultry industry and swine industry. They need a lot of soybeans. They will be a buyer, but the big question becomes, at what point do they switch away from buying from the U.S. and start buying more from South America?
We should mention, with the rally yesterday and the start this morning on Friday morning, the January contract for beans is back above $13. If you do have some in the bin yet, do you want to be aggressive right around here, or do you think there's more gain or more ground to gain?
Yeah, that's what everybody's wrestling with. We like to be a seller above 13. You don't necessarily have to sell out here, but you definitely should be making some sales here. what we're really looking at, and then what everybody's looking at, is that, does USDA need to tighten up the balance sheet again in the next report? A lot of people are thinking, because on the strong export pace, maybe exports need to go up another 20 to 50 million bushels. If that's the case, then that does tighten up our ending stock numbers back to levels not quite as tight as last year, but headed that way.
We know South America is going to produce a big crop. Brazil is going to produce more than they produced last year, which is a lot.
Right.
How do you weigh that into whether or not you should be selling right now, or at least up until maybe February when they start to pull that crop out of the ground?
Yeah, you bring up an excellent point, Jeff, because what happens is right now China is looking at Brazil right now, February forward, because they are cheaper, and they're looking at them because it looks like they're going to have a really big crop. I think as you look forward, you have to really keep a close eye on the South American weather. If they would have any weather problems, that could cause us to bounce higher, but right now they've off to an excellent start.
So maybe sell those bounces if they happen in
Sell
the future.
the bounces. That'd be a general theme, is to definitely sell bounces. Don't get bullish on bounces, sell bounces.
Let's move into corn. What's the argument for being bearish right now, and what's the argument for being bullish?
Well, it's really hard. If you want to be bullish corn right now, it's very hard to be bullish. The one bright note would be is that we are getting some exports back. But what we have to realize is that there's a lot of feed grains out there across the world. The Black Sea still has bushels to sell, and they have been, below the U.S. on price. South America looks like they're going to have some bigger crops coming on. The forecast for their safrinha crop looks like that could work into the channels at some cheaper prices. But we have to watch that safrinha crop. A lot of people are questioning how many actual acres will get planted, so we're going to have to watch those prices in South America on corn closely.
You hanging maybe around $4.20 right now. If the farmer's looking for $5, and maybe if the farmer is being bearish and saying, I could see $3 here, kind of temper those two expectations. Which do you think is likely to occur?
I think what you have a chance of, you probably have, if you were going to be looking at instead of $5, I'd set my expectations more around like the 440 type area. And don't be surprised if we see it dip down at some point below 4. I don't think it'll go very far below, but in order for us to go much above the 440 level, we have to see some problems out there. There has to be some weather problems across the globe.
Where are you a seller at? Still on rallies?
I'm still a seller on rallies. I wouldn't be a seller necessarily here today, but if we'd get about 15 cents higher on this market in the 440 area for the December 2014 or 13 crop, excuse me, yeah, we would be a seller.
Go more on corn exports for me. Obviously better than last year, but is it good? Is it where you want it to be?
Yeah, it's picking up. No, it's definitely not where we want it to be. A lot of that gets to be, what we found is that, $7 and $8 corn, it hurt the demand all across the world, and it allowed other sellers to step in and be very competitive. So we'd like to see that demand to come back. Yesterday there was about 945,000 metric tons that went out. We only need about 266, so it looks good right now, but we do need to see it improve to pick up some of the slack and get rid of some of those extra bushels we have.
You look at the contracts going forward into 2014, and corn and beans are on directly opposite paths here. How do you weigh selling the 2014 crop if you were to contract forward?
Yeah, what we're looking at right now in the 2014, I think on the corn market, starting there first, if we get a market, we'd like to wait until 480, which is about 20 cents above where we're at today, but we may have to accept the 460 type area. As we move over to soybeans, our target had been we'd like to make sales above $12, but I think we're going to have to accept the 1160 area. What's going to get difficult on beans is that we're going to have this inverse. We're going to have better prices in the old crop than what's in the new crop, and a lot of people are going to look at that and go, well, those have to come together. We're going to keep some big inverses between the old and the new crop going forward. The old crop's going to be priced much higher than the new crop.
That was only a portion of our interview with Jeff. You can see the full version on the Market Journal website and through our mobile app. Another crop is emerging as an option in the diverse Nebraska Panhandle rotation. That crop is soybeans, and the practice is described in a feature article in the November Nebraska Farmer. Pinto beans and alfalfa are much more popular legumes in the Panhandle, but the favorable prices paid for soybeans and the good yields under a no-till irrigated system are benefits. Neil Christian of Gordon says soybeans work best for him following a corn crop, with corn following wheat in his rotation. You can read more about the emergence of soybeans in the Panhandle in the November Nebraska Farmer. In early October, we discussed the use of Zilmax and other beta-agonists in the cattle feeding industry. The conversation was relevant because large beef companies had recently decided to no longer accept cattle that had been fed Zilmax. That decision occurred after concerns were raised about animal lameness and death loss on the packing side. Merck Animal Health, the company producing Zilmax, suspended sales and said it would review the use of the feed additive. You'll remember now, in the opening of the show, I mentioned Oklahoma State University's Consumer Food Survey, which for the first time this month began tracking buyers' awareness and concern of Zilmax. While the issue did register, it's listed below most others. The matter of using this beta-agonist also comes at a time when beef supplies are already tight, and losing the potential added weight benefit with this technology would only squeeze that further. UNL and other outside studies have tracked cattle on Zilmax and reviewed that data to determine if there's a link between the additive and lameness or death loss. Earlier this week, we discussed the findings and the use of Zilmax with Galen Erickson in the Animal Science Library on East Campus.
This is a technology, a beta-agonist, that's a feed additive that's put in the feed for the last ending period of the cattle's time in the feedlot. And it increases growth, increases carcass weights by about 33 pounds. And so it's a very useful technology to add weight. And the issue comes up then that recently people have been wondering, does that technology have any negative impacts on lameness or death loss or susceptibility to stress? And so that's been the big debate here the last couple months.
In your UNL studies, this has been one of the things that you've tracked. You haven't necessarily recorded some of the data because it hasn't been big enough to note, correct?
Yeah, in all of those studies that have been done, obviously we keep track of any death loss and any animal health related problems like lameness. Interestingly though, that many times we look at what's the performance and we don't report death loss or lameness or health problems simply because we don't see any difference between the treatments. And so you think, well, there's no reason to report it. Well, now there's a reason to report that. And so going back and looking at 18 prior studies, not all UNL, only 2 of those at UNL, late stage death loss on cattle in controlled cohort studies, meaning same population of cattle, half of them signed randomly to this control, half of them put on Zilmax. Death loss was 0.24% in both populations. So the data don't suggest that there's an increased death loss when you feed this specific technology.
Have you noticed a difference in lameness in any of those cattle?
Well, lameness is, in terms of observations on all those studies, there's not been a report of increased lameness at the feedlot sector. And in a few of these studies, including one we've done at UNL, we actually put pedometers on the cattle, and you can assess hours standing, hours lying down in steps, and at least during the time those cattle are in the feedlot phase, those last 20 days, there's not a difference in amount of time standing, lying, or steps.
Now, Merck has funded some of these studies, and somebody might walk in and say, well, this data is funded by the company who's producing one of these products, Zilmax specifically. How can you take that for what it is?
Yeah, that's a fair question, and it's one I get a lot of. But here's the way it works. In all of these trials, especially when they're done here at the University of Nebraska or with university involvement, we require funding because we need to pay graduate students and those people that are working on collecting data. So we require funding, but the company or the government, if it's funded by the government, are not here collecting that data. Those data are collected by us. In fact, we don't see those people until after the trial is done and the data is fully collected. So I think the question of bias in that is really unfounded. If we ever do a trial and we bias the data or the results, I won't be at the University of Nebraska any longer because it's just not acceptable. So it's really not a problem, in my opinion, of where the funding comes from. The big question is who would fund it if they didn't, because they put hundreds of millions of dollars into funding research on products that they produce, and that's why it's well proven. So my question would be is if you want to rely on data that are not funded by companies that have products, who will fund that work? And it's fairly expensive research.
One of the things you mentioned yesterday was the observations are at the packing industry. They're not necessarily in the feedlot sector, so something's happening somewhere in between, and if it's not Zilmax, then what is it?
Yeah, and that's the thing I'm most interested in, is that I'm not questioning that people have seen increased challenges particularly let's focus on lameness. And it's all those observations that I'm seeing and hearing are generally at the packing plant. And so are we handling cattle differently? Do we need to handle these cattle differently? Do we need to change how we're housing these cattle, how we're transporting them? So it raises a whole host of questions about improving animal husbandry. And I think that's a good thing that can come out of this is how do we do things differently then to solve this problem? In my opinion, based on the data, just removing the use of a beta-agonist will not solve this problem then. And so I hope we have the same focus to continue to solve this problem as an industry. And I think that the other thing we have to do is figure out how big of a problem this is, and I think it's quite small. There are a lot of other things that can cause lameness issues, and we need to tackle all of those issues.
For people that don't know exactly how much it helps the beef industry to use products like this, they might say, well, just don't feed it. Don't feed it at all. What would be the argument against that?
Well, yeah, I think the easy thing to say is, well, Merck has suspended sales, and we should say, well, let's just discontinue the use of it. I have some serious concerns there. Again, I think that producers have choices on what they use, and I think that's great in this country that we have choices to use these products or not. But now we don't have a choice if you take it away. Well, the benefits of using technology are pretty clear. It's been economical for the beef production system, but my biggest concern if we don't use this technology is we will need to have more cows if we're going to produce the same amount of beef, or we'll produce less beef. And I'm already concerned on the amount of beef production that we have in the U.S. and not how do we decrease it, how do we increase it. And especially as population grows. And so there's environmental pluses by having more beef with less cows. There's some efficiency gains that we have in the U.S. We're the most efficient beef producing system in the world. And then there's some real pluses then at the consumer level of the economics and being able to feed more people beef. So I think we want to be careful by limiting use of technology and going backwards, if you will, when I think, if anything, the next 20 to 50 years we'll need to focus on how to use more technology.
Now with this week's weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Before we get to the main forecast, let's kind of take a retrospective look at how bad I blew the forecast during this last 7-day period. And of course, last week we were talking about fairly warm conditions moving in through the weekend period, and then a cool down slightly as we got into the midweek to late week period. But at that time, the models were not really projecting much of a significant storm system moving into our region. There was indications that it would move in on Friday, but it came a little bit early and it came a little bit more intense with the cold air intrusion. In fact, not more than a little bit intense, much more intense than what the models were forecasting. In fact, high temperatures that my initial forecast were running about 20 degrees above what we actually seen. So yes, this is the time of the year when models make fools of meteorologists, and it's exactly what this one did. You take it with a grain of salt. Unfortunately, this is going to happen, especially when we have a pattern that's changing almost on a daily basis. Now, right now it looks like the models do indicate that we are not going to see any significant moisture during this upcoming period. That being said, there is a system that's going to start to move its way into the southern plains as we get into late next week, and it bears watching, so keep an eye on the weather forecast because conditions at this time of the year can drastically change. But right now, the main energy with that system remains south of the state, so we should have good travel weather at least going into the Thanksgiving Day weekend, and if the models are correct, that will hold all the way through the Thanksgiving region for the Central Plains. So let's take a look at the upper air models and see how this week should progress. And as we go to the upper air models, I'll draw your attention to this strong upper air trough situated over the Great Lakes, which means they're going to see a northwest flow. And anytime you have a northwest flow over the Great Lakes, that means periods of snow showers and some of those heavy lake effect snows for Michigan, and of course Lake Erie and Lake Ontario downwind from the lakes will see heavy snow. But more importantly, we have an upper air low that was broke off from this trough as it started to work its way across the country, and this one will drift slowly across the southern plains during the next 7-day period and exit out into the eastern Atlantic as we get late into next week. This means very heavy precipitation for the southwest, and that will continue to move its way across Texas and then further east as the week progresses, and this will be very good news for the wheat crop, particularly in Texas and Oklahoma. For today, we are expecting very cool conditions across the eastern part of the state and clear conditions with a slight warming trend starting to build into western Nebraska. More importantly, we'll see that warm air start to lift into western Nebraska tomorrow, easily into the 40s, maybe even approaching the 50 in a few isolated locations, and the cold air slowly retreats to the northeast. So we are going to see in northeastern Nebraska temperatures that will be confined to the upper 30s to the lower 40s, with a little bit more warming as we get into Monday. As this ridge tries to build in from the west, that'll bring in some 50s across a widespread portion of the western third of the state, and 40s easily for most of eastern Nebraska. No precipitation as the main low stays to our south. On Tuesday, this low continues to stay south of us and moves toward the southeast, and we see this high pressure system starting to build in. So I think everybody is going to be well into the 40s across the eastern part of the state. In the western part of the state, we're probably looking at right around the 50 to the 55 degree mark. On Wednesday, high pressure firmly in place across our region. That low moves to the southeast, and as we get into Thursday, which is Thanksgiving, we start to see another trough moving into the western United States, bringing a southwesterly flow, so very nice conditions on Thursday. And on Friday, this system starts to approach, may actually generate a little bit of light precipitation across eastern Nebraska late in the day. The temperature forecast indicates very cold conditions this weekend with a slight moderation as we move through the week, and we'll see a slight chance of precipitation on Friday. More importantly, the cold air shifts to our east from next Thursday through the following Tuesday in terms of the precipitation. Looks like a dry trend. We look at the December temperature forecast, looking like above normal temperatures to our south in terms of precipitation. The core area below normal precipitation also remains to our south.
Thanks, Al. Our interviews from today's show with Mike Briggs, Jeff Peterson, and Galen Erickson are available individually on the Market Journal website and through our mobile app as part of the November 22nd episode. Next week, Frayne Olson will be our marketing analyst, and Terry Kloppenstein will talk with us about changes in the beef industry over his 48-year career here at UNL. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
No matter how you look at it, animal agriculture helps Nebraska's economy. The livestock industry provides increased tax revenues for schools and community services. Livestock enterprises also create jobs while contributing to existing businesses such as local banks and grocery stores. A thriving livestock industry helps maintain our current way of life, but also provides opportunities for the next generation of farm families. The Nebraska Soybean Checkoff helps to raise awareness of the importance of animal agriculture to Nebraska.